Look at the unemployment numbers in the US. A little bit weaker than expected. Concerns in recession developing in the US and China. And I saw also Fed Governor Whaler comes out, says a few words and thinks we might get a bigger rate cut. But first, let's have a look at what's happening there with the recent sell-off in the US equity markets. Now, obviously, we've felt that the market's been overbought for some time. Valuations are just too high. We've seen a significant sell-off. The key will be whether or not this will continue, or whether or not we bounce back to the highs and break through. If you think the S&P is trading 5 or below at the moment, so the record high is around at 5650, and we're now below that level. So we're now going to test the markets to see whether or not it's going to continue. And to me, that's going to be quite a key. I think when you look at it and where it's trading, around that 5,470, still on highs, we might see a bit of a bounce back. The reasons for the pullback, we actually think, obviously, inflation issues, and also there is a need for the Fed to change monetary policy. Now, we've already said that inflation's under control. That's good. And as we lock below just that 3%, we're falling in line with the target and the expectations from the Fed. And to me, that's an important thing. Because if the Fed starts to get comfortable about this, they're comfortable, then we'll see interest rates start to adjust or monetary policy start to normalize after it being so high. And I think that's what we're starting to see. And I think what we saw it from the Jackson Hole Symposium, obviously data driven. And if the economic numbers start to slow down, well, then you'll see the Fed will look at it. Now, interestingly, the numbers last week for employment were weaker than expected. And of course, the last time we had it, we also had quite a large revision in terms of their numbers. Now, that suggested that the economy is a lot weaker than what was perceived. And as we see more economic numbers coming through, we start to get a sense that the US economy is not as strong as what is perceived. So as a result of that, you're potentially going to see, and we saw one of the Fed governors, Whaler, come out and said, this is the case. The labour market is weak. So therefore, we've got to be a little bit more aggressive on monetary policy and easing. So do we look for a 25% basis point or a 50% basis points? I think it'll still be 25 basis points, but really the market's going to decide whether this rate cut is as a result of an economy potentially weakening the need for stimulus. That'll see the valuation prices and things start to come lower until that adjusts. Or are we looking at this just to need because inflation is under control and there's no need to keep rates this high? So I think there is the two arguments there. And I think the key there is keeping an eye on economic numbers. And if they start to weaken, then investors are going to say, you know what, this correction is going to be a lot deeper. And if that's the case, we'll still start to see the equity markets continue to be under pressure. Okay, so this week, I think in America, and this is the focus we've got the CPI data, and the CPI data there once again shows that the annualized figure, the year-on-year figure, remains below 3% and actually 2.9 or 2.8, then the market will say there's no need to have interest rates this high. So we will get a change. So keep an eye on that. But then towards the end of the week, Friday, Saturday, depending on which place of the world you're in, we get industrial production and although retail sales and their housing prices, and they're the ones that are going to really dictate where we're going to be going in terms of that, whether it's 0.5%. Remember, the 17th and 18th of this month, when the Fed meets, the FOMC meeting, and we actually get to see what they're going to do. We actually feel they will move on rates. The key is going to be how much, and then the wording after that. So pretty key there. Also, as we've mentioned, there's a little bit of a chance there that the Chinese economy might go into a recession. So let's keep an eye on some of the numbers there. The inflation data we've just recently had out of China was okay, but it is showing signs that the economy is picking up. So that's positive. We've also got some good economic numbers to get our teeth into about what's happening in China, and that'll also help the decision from what the Fed actually does. Okay, so that's why we think we are short the S&P. So we think it's going to continue to trade lower. Just a few other things that we've looked at, I guess, and I think the important thing here is in the US market with those equities, because we'll take that lead from there. Please subscribe to our YouTube channel and click like to inspire you to take trading actions.